Prime Minister Mark Carney's Liberal government has just tabled its first budget. So what should we make of it?
Overall, it's an attempt at a reset, but only time will tell whether this is the budget for the moment or whether this is another budget in a line of more to come as we cobble our way out of what's been a very challenging couple of years now.
That's Rebekah Young from the Scotiabank economics team. Rebekah is the head of inclusion and resilience economics at Scotiabank. In this episode, she joins us from Ottawa, where she's had a chance to review the new budget and will break down the big picture takeaways for us. She'll tell Armina Lagaya which measures caught her eye, what surprised her, and what it all might mean for Canadians and the economy. I'm Stephen Maurice, and this is Perspectives. Now here's Armina Lagaya.
Rebekah, thanks for joining us.
Thank you for having me.
Thank you in particular because you're joining us from the media lockup in Ottawa. And we're chatting at about 5 o'clock on November 4th, so the day the federal budget has been announced. So what is the headline here?
I think the headline is that there was a lot of hype that this would be a transformational budget. But a lot of what we saw in the budget, we already knew was coming. So I think there was a little bit of a disappointment that this wasn't as much as we thought. But quite frankly, they couldn't have gone much more because they spent a lot today in today's budget.
Maybe let's look at this from the perspective of the average Canadian. One of the major issues talked about before the budget was tabled and during the election even was affordability, a major issue on the minds of Canadians. What is your take on this budget? Is the average Canadian better off with this budget? Is there something here for them?
It's really too early to tell. And it's a great question because many Canadians will open the budget and say, what's in it for me? And they'll be disappointed because there's a whole chapter on housing and affordability, but everything in there pretty much is stuff that we already knew was on the table, including the personal income tax cut and the GST for first-time home buyers. So there was really nothing new for Canadians. But the government isn't trying to do that. They're trying to pull back consumption and shift to investment type of activities. So they offered restraint there, but the real challenge is going to be selling that to Canadians because Canadians look to the budget to see how is it going to improve their welfare. Now, the budget does point to 5 years down the road, look what it's going to do to your welfare. If we grow investment, if private sector invests, if we grow GDP, this is how it's going to translate into more meaningful welfare for Canadians. But they're talking about down the horizon 5 years. They're saying, wait, be patient, trust us that, investment will come. So again, I think the real challenge is going to be, will Canadians buy this budget? That we know parliamentarians are going to be voting on it. Now, I think it will pass, just the math of the votes they need, but they'll still have a big job really selling this to the average Canadian as to what it's going to do for them today, not 5 years down the road.
Mm-hmm. Let's unpack some of the big spending, what they had referred to as generational investments ahead of the budget. So it's $89.7 billion new spending over 5 years. What is a notable ticket item here? And is it accomplishing that goal of spurring the economy?
So I'd first unpack that $89 billion because again, this budget was much hyped. And I feel there's a bit of a sense of, was it a nothing burger? Wasn't transformational? Did it meet the moment? $89 billion net is a lot of net fiscal outlay for a typical budget. So that's a big number. It's even bigger when you gross out new spending at $142 billion because they folded in there $60 billion savings from public sector and programming cuts that are going to happen. So this was a really big spending package before you think about what you thought it would be or what the hype around it would be. So it is big, even if it kind of didn't necessarily meet the moment. Now, what was included in there? To be honest, really difficult to unpack because they have so many new metrics. They've got like an operating balance and a capital balance, and then they've got what's the base versus what did we add on? What did we add on before we got to budget day versus what did we add on budget day? So there are a whole lot of complexity in there. And I already mentioned with housing, for example, a whole chapter on stuff we already knew was coming. Now, the more meatier stuff, the biggest outlay was really around military. So that was about $81 billion, I recall now, over 5 years that they're adding on to military spending, mostly to keep it at that 2% and a little bit above the baseline. But we know now that's the floor. We know the government has a new target of 5% by 2035. They didn't give us enough detail or framework as to how they're going to think about military versus related military expenditure. They really just kind of gave a down down payment. And I expect that they'll come back with more detail at some point, more broadly, how they're going to do that. The next major spending was infrastructure. And the big announcement was around, we saw headlines even heading into budget day, some leaks that there would be a $50 billion infrastructure fund for provinces and municipalities to tap into for a whole host of, wastewater, transit, you name it, would catch infrastructure financing needs. Now, teasing out what was already financed, that this amalgamated a number of various infrastructure funds that already existed. So again, the net number was much smaller than that, but that was still another major package. And then the third category of stuff that was announced was around trade diversification and worker and business relief related to sectors and households that have been hit hardest by the ongoing trade war. And again, that has been rolled out over the last few weeks and months. So a lot of what we knew already was coming. But those are kind of the main buckets in there. And I would just add, because the government tacked on two strategies within the budget that are normally tabled outside of a budget process. And, the first one was a climate competitiveness strategy and the second immigration. Climate didn't give us a whole lot new. I think some folks were looking for regulatory changes. Now, I would say they hinted at things like the oil and gas sector emissions cap eventually being made redundant. They talked about strengthening the industrial carbon emission scheme. Those are the things that need to happen to really make the math and the politics work for things like CCUS and pipelines if we get there as a country.
To clarify, CCUS, that's carbon capture, utilization, and storage.
Yeah, exactly. So I think, not a lot changed in the climate competitiveness strategy at first glance, but, I think we need to see more details where that goes in the coming months. And then just finally on the immigration numbers, they're tighter. The government is going to tighten the bolt, so to speak, to rein in numbers. And what we saw is they're going to mostly stabilize permanent resident numbers at the 2026 plan numbers at 380,000. They're going to hold it steady over the next 3 years, but they're going to rein in the number of temporary residents coming into the country, and quite substantially. Now, they are maintaining the target of bringing the stock of those temporary residents in the country to 5% by the end of 2027. That was the commitment in the election campaign, but the data we had seen in population numbers has been decelerating, but not consistent with that path. So they've more or less said we are going to double down and meet that. And that will be quite an aggressive pace of decelerization, but it'll be offset somewhat in economic terms. One, with a slowdown in labor markets, very soft now. But two, they also have a number of measures to increase kind of the economic prowess of those that are coming into the country. So one, they're going to shift the portion of permanent residents, increase the share of economic immigration. And two, they're going to establish a talent stream for high tech, for high skills, for the types of capacities that the country is looking for to build out its growth agenda.
Mm-hmm. One of the numbers that the finance minister had said was that the budget could spur about $1 trillion in investment. You had said that it's a lot of hurrying up and wait, maybe this is down the line, but does it have that potential? Can it actually, whether in the short term or the long term, spur that $1 trillion of investment that the economy needs?
Well, I think it's really too early to tell. And, that was quite frankly surprising to see that they had upped that number. And so during the campaign trail, the pledge had been, we're going to unlock $500 billion in investment over 5 years. So to kind of open the book and see now it's $1 trillion, and there are a host of other reasons that are impeding investment right now. So, the government, with this gross $142 billion they put on the table in the budget today, provides, some public investment or some kind of direct investment. It also provides more ballast or anchoring finance through, for example, an increased capitalization of the Canada Infrastructure Bank. But it also has non-fiscal stuff that they're doing. They've given a stronger mandate to the Major Projects Office to basically coordinate financing across multiple agencies and crowns. So I think there's a lot of pieces of the puzzle that need to fall into place for capital to come back to the country. And keep in mind, it's not just kind of government government financing. They need to de-risk. They need to prove that they can meet the 2-year commitment to get from project idea to, project approval, including that consultation risk. A lot needs to happen, and not to mention the exogenous uncertainties related to U.S. policy, trying to pull manufacturing and other investment activities to the U.S. or back to the U.S. So there are a lot of headwinds. But I think, to be fair to the government, I would say they're setting the table. They still need others to come to the table and start investing in the country and then start investing in some of these major projects. And we won't get to $1 trillion if nobody comes to the table. If they set the table, we have just bigger deficits and higher debt, and we don't have greater investment, of the transformational type set that they're hoping for. Now, there was one new measure, relatively small, $1.5 billion in fiscal cost over 5 years, which was the productivity super deduction. But again, it was a relatively small measure in the bigger picture of schemes of what they're trying to do. They also didn't announce a corporate tax review, which is something that's been promised. And it sounds like the finance minister backed away even in the press scrum from doing that sort of measure. And they point to, various charts that, yes, okay, Canada's marginal effective tax rate for corporations is going to be lower than all of its peers. And this super deduction is going to bring us even lower relative to the US. And so I think that's an important step.
Let's pivot a little bit to talk about the sacrifices that the government had signaled we would expect in this budget. What is the most notable cut in this budget, in your view?
The hardest hit will be Ottawa, and so they are planning to cut jobs. So the head count, they are looking at an attrition of about 10% over the next 3 years. Now, some of that will be through natural attrition, but they will be looking at voluntary early retirements. They are going to be cutting executive level positions, a number of, higher executives within government. So there are going to be wage cuts, but there are also programming cuts. And so we got some teasers as to, a couple of measures. And the one that really hit the headlines was the tree planting. But we really only got a smattering of, a few examples of some of the programs that might be cut. We got some departmental agencies that would have so-called modernizing or streamlining and numbers put to it. But we didn't really get yet a full sense of some of the programs that day-to-day Canadians themselves might feel in terms of services that are cut. So it's premature, other than to know that every, 15 years or so, Ottawa goes through a major expenditure review, and they've put one on the table that is more or less commensurate with those past cuts. And so I think that there's going to be a bit of a kind of a right sizing of the government, at least in its direct programming expenses. I would say what's different about this program cut relative to past ones is that the government spending, its overall expenditure envelope has really ballooned, and it's not just this sandbox direct operating expenditures, including programs and salaries. It's also been transfers to households and provinces, other levels of government. Those remain intact right now. So they are, going to go through these deep cuts, but it's very concentrated. While a big part of the balance sheet on what goes out the door for government expenditures is so far protected.
Mm-hmm. So speaking of balance sheet, let's talk about the deficit. It's roughly $78 billion, which obviously sounds like a lot, but I wonder if you could put that in perspective. Is this a figure that we should be concerned about in terms of a deficit, or is that necessary, reasonable, given the circumstances and the challenges that we face?
I think it was largely expected. I think it was within the range of what most forecasters, including ourselves, had expected. I think it was relatively restrained because, right now economic activity is weak. And so the budget is predicated on GDP growth of just 1.1% GDP this year, roughly the same next year. That's, roughly half of what the economy at full capacity typically operates. Now, trade and uncertainty, et cetera, has really eroded that growth potential. So there is an argument in economic terms, given that the slack in the economy continues to build, that there is a role for fiscal to support the economy through that transition and also support it onto a higher level, or at least recover some of that lost potential. So a deficit of, 2.7%, it is high outside of an outright crisis, but we also don't want to, be heading in that direction. So I think it, is going to help kind of, if you look out over the next couple of quarters, government spending is going to play a pretty big role in keeping the economy moving sideways until we get to the other side of the brunt of all this kind of shock and uncertainty that we are facing. So, and then it declines. So I think, in fact, if anything, it was a surprise somewhat that deficits land over 5 years somewhere in the 1.5% range. And the government had earlier indicated they were willing more or less to run deficits of about 2%. I think a combination of factors. If you look at debt, so deficit, adds to debt each year. You're paying more and more to finance that shortfall. Debt increases by about 2 percentage points over the next 2-3 years, and then it's mostly stabilizes. Very marginal decline. They say our anchor is to keep debt declining as a share of GDP over the horizon, but it's really only in that final year that you see a 0.1 percentage point of GDP decline. So they're really skirting on a fine line, but they say our anchor is that we're not going to let that start ticking up over the horizon. So if economic conditions or interest rates change, they are going to have to change their approach to fiscal management. They haven't given themselves a lot of wiggle room. So again, a lot of money spent in the budget. It might have underwhelmed some folks, but I think outside of a crisis, I don't think they really could have gone much further without potentially spooking markets with a debt heading skyward.
Mm-hmm. So a big number overall, but reasonable given the circumstances.
That would be my take, yes.
Mm-hmm. Overall, is it a step in the right direction? Is this taking a step towards setting up Canada for success?
We certainly know that we need to shift from a consumption-driven economy to an investment one. But I think the proof really is in the pudding that, government can't carry the day. Government certainly has a role in public procurement, and they're trying to do that with military. They're trying to do that with infrastructure. Our track record isn't great. They tend to be, cost overruns and delays. They say, don't worry, this time around, we're doing it different. We've set up new agencies. We've removed some of the red tape. Proof will be in the pudding. Is this time different that they are actually going to play that public procurement role? The second major factor will be, they also provide an anchor in de-risking or reducing the cost of capital for private sector to come in by removing a lot of the risk, whether it's time or delays, et cetera. So again, only time will tell if they are doing enough. And they certainly have more to go. They didn't go as far as they could have on corporate tax measures. I think they didn't give a lot of detail on what else they're doing on the regulatory agenda overall. So I think, again, heading in the right direction, but we're still really, really early in the game. And I think we need to see more traction to have that confidence that a reset really is underway.
Mm-hmm. So in your view, what are the 3 biggest takeaways for Canadians from this budget?
3 big takeaways. One, it's premature to say it's transformational. It sets the table with some, higher government spending in order to attract others to the table. But 2, we really need that other investment coming to the table for this to be a transformational budget. Only time will tell. The third really is that Canadians have become conditioned to looking at a budget, what's in it for me, and there won't be a lot in it for most Canadians. And frankly, if there is something in it, it's probably a cut. So overall, it's an attempt at a reset, but only time will tell whether this is, the budget for the moment or whether this is another budget in a line of more to come as we cobble our way out of what's been a very challenging couple of years now.
Thank you so much, Rebekah, for coming on the podcast to break down this hefty budget for us.
Thank you for having me.
I've been speaking with Rebekah Young, Vice President and Head of Inclusion and Resilience Economics at Scotiabank. The Perspectives podcast is made by me, Armina Lagaya, Stephen Maurice, and our producer, Andrew Norton. The clip you heard in the intro was from the Bank of Canada. For a transcript of this episode, as well as other stories, insights, analysis, and thought leadership, visit our website, scotiabank.com/perspectives. We'll see you next time.